recording. That's what I was missing. And I'm gonna leave it open if you guys want to network with each other. I'm gonna create a private room so that way if you guys want to network and just share some stories amongst each other, by all means, I'll open up at the end of the Zoom so that way you guys can head over there and again network with one another as well too. So what time is it? 6:04. All right. We can go ahead and start now. Let me set this up. All right, cool. Uh, we should be having a few other people coming in, so they'll probably join as I start this. It always happens whatsoever as well too. But my name is Elton, like Elton John. I've been wholesaling for the last 10 months, transitioning to doing less wholesaling and looking for like my own properties to invest in for my own, a lot outside of California because I'm located in California. A little beyond that, besides like wholesaling or what got me to like wholesaling, besides like the money, it's always about relationships, just like sales. My background has been sales. For the last 10 years or a full decade of just sales. So I always work with teams, always work with people. So it's pretty much the same business. It's just now there's more capital available in terms of like wholesaling. And I started studying wholesaling back in 2020 during the pandemic. That's when I first started seeing a lot of videos about wholesaling. And even beyond that, I read like a lot of books in terms of like real estate. So I was always interested in real estate. My background, my education has been finance, aerospace engineering, and business. So just numbers came out really easy for me. So now implementing numbers into real estate, it's literally all about numbers. So it just takes time and practice and just a lot of experience for you to get your hands on in terms of like real estate. So regardless of where your level of education is in real estate, if you're a beginner or if you have 20, 30, 40 years of experience, it's perfectly fine wherever, regardless of where you are. It's when you start it up, it's literally all about numbers and making sure that the numbers make sense in terms of like the analysis. But now when it comes to real estate wholesaling, it is slightly different because you're thinking in terms of a buyer, who your buyer is going to be, how much they want to take like on the investment, and of course you just have to understand where the numbers are coming in from. So just be mindful of that when it comes to looking for like buyers. But when we're going to be analyzing, we're going to be analyzing, of course, our wholesale fee into it. So that's the only thing about it that you do have to understand. And so. With that being said, I'm just going to right up into it. So the process about real estate wholesaling, there's a numerous amount of steps that you do have to take into play. The only thing about it is definitely all the major steps do have little steps into them. So it is more broad than just getting a property in a contract. You definitely have to, again, network with buyers, agents, getting leads from sellers as well too. So if you're trying to get properties off market, and also work with title companies, understand how they do that, what kind of fees you're going to be looking into, and of course, analyzing the properties in terms of finding comps. And again, there's a lot of aspects into it. The main one that I'm going to be focused on is mainly finding out what the repairs is and also what the repairs is, but also understanding what the offers should be coming in as well too in terms of the properties. So the only thing with this, it is definitely you definitely have to be aware of some things along the way. But I'm going to be showing you guys some notes that I've noticed and then some things that I've learned along my way that will definitely help you expedite like your process in terms of like analyzing these deals. So from here, hold on, give me 1 second. Let me put this person out here. All right, cool. So sorry about that. We have some people being a little bit silly on the chat. It's just a lot of people just coming in. It's perfectly fine. But let's remove all this, clear this out. Awesome. And there you go. So So the next step that we have to understand is, again, we have to understand where to analyze. The very first thing that we're going to be coming across in mind, it is going to be ARV, or after repair value. What after repair value, it really says on the words what the property is going to be worth once it gets fixed up from there. A lot of investors are going to be doing it very differently across the board. So again, it's all about understanding how your buyers are going to be doing a lot of the numbers. There are two most common ones. Investor one and two are the most common ones across the nation. Some of them like to do 70%, depending on their markets. Sometimes it's 75%, maybe 80% as well too. If they're trying to buy and hold, it's going to be a whole different story as well too in terms of their analysis. So again, understanding your buyers is literally the number one step I always recommend people to get to know before you start looking for properties. Because if you don't know what buyers are looking for, you're kind of playing you're really playing the darts really blind, where you're trying to aim for a specific property, or you're targeting a specific property, but there's not a lot of interested buyers in that area whatsoever. So it's understanding what buyers are looking for, and then start searching based on that criteria that a lot of that your buyers are interested in. So that way, again, it really helps it out if you want to go directly to sellers, or if you want to go directly to agents. Whatever your strategy is, again, take the step back and understand like your buyers. Next is, of course, the major one of them all is understanding repairs. Repairs, I don't dwell too much with them whatsoever when it comes to wholesaling. The reason why is I bring a property over to an investor that is looking that I analyze that it needs maybe $45,000, maybe $60,000 in repairs. If I bring it to investor number one, that investor is going to end up telling me that the property needs 80 to like $100,000 worth of repairs. I bring it to investor number two, that investor is going to tell me that the property needs maybe 40,000, maybe $45,000 tops of it. That's because, again, they're going to be doing they're going to be using different materials. Maybe the labor, maybe they're new to like the market, so the labor is going to be more expensive in the beginning. But if they start using the same contractor, then their expenses start coming down. So when it comes to repairs, unless you're a contractor and you're really good to like analyze based on like pictures, you need to have like a good amount of pictures, or just get a good amount of information. It'll be easier for you to understand the repairs. If you're not a contractor, it is perfectly fine. Just go based on the average repairs. When we're looking at light repairs are going to be more on the side of rental properties, or properties that are really in great condition and they just need that minimal work. They're going to be needing just very quick changing the carpet and then changing the paint whatsoever. When we're looking now into the average repairs are going to be a little bit more detail, mainly in the main areas like kitchen, bathroom, floors. There's going to be some painting. Maybe you saw the home from outside, and you saw that it's like really bad shape in the outside. Sometimes it's literally about just color. The color is just really outdated for the neighborhood or for the property. Maybe some of the wood, or depending on what kind of siding it is, or what kind of build it is, if it's brick, wood, vinyl, whatever it is. Again, it just needs either some tiny replacements, and like biggest thing is going to be like the paint job as well too. And of course, there's going to be some landscaping here and there. And so this, again, is going to start getting it more into like those detail things. And then just whenever a fix and flipper is coming into these type of properties, then it's definitely going to need some extra touches, or some touches to make it very unique. But a lot of fix and flippers convert a lot of these properties into like a gray and white type of coloring. Gray and white, black and white, or some type of like olive green, or green and white. Those are like the three most common color designations. So if you're able to see like a lot of those properties, you're gonna definitely come across those three color combinations. Next is about gut job repairs. Gut job repairs, think about a property that is like a complete nightmare type of property, where it either has to get completely demolished because you can start all over again, and or maybe there's enough room depending on the type of zoning it is as well too. Maybe the property is available to do a R1 zoning. And this is to some states it's not available. It's varies per state, but what R1 zone in one of the states that I do deals is basically it get converted into a multifamily property, or I can build two different homes in that in just one lot. So it just depends on what the city codes are for your city and how much of a room you have in a lot where you can convert a single family home into a multifamily home. So that's where the property can get demolished, and that brings more revenue into the either the fix and flipper, or if the person is buying and holding, it just brings a significant amount of value to the area, and the property as well too. But usually with these scheduled repairs, it's pretty much take down everything down to like the studs and start working on your way up there, and then maybe you have to do some floor plans changes or just bigger changes to again bring some uniqueness into like the property. But these gut job repairs are going to have major issues, and those major issues are going to be either in the foundation, in the roof, or again overall the entire property. And then occasionally you definitely have some issues on the piping as well too. So again, think about a nightmare property. These gut job repair properties are going to be a nightmare for sure. But again, it's all about usually they're going to be getting priced really low, less than 50, depending on your market area, maybe less than $100,000 as well too. So it's just depending on those prices, but they're going to be very, very extremely cheap as well too. And also be aware of properties that are mobile homes as well too. Mobile homes that are located in land. Sometimes some properties are being sold just the property itself, but not the land. So just be mindful about land as well too in your property searching. Next, whenever we look, first we have to find out the repairs. Once we find the repairs, part of the process of getting the ARV is finding comps or comparables. When we're looking for comparables, you want to stick to certain parameters, and these parameters are based um, on an appraiser's analysis to looking like a property, because when an appraiser is looking for similar homes, they are going to be looking for similar homes in the neighborhood, not in the area, not in the zip code, in the neighborhood. And what they're going to be looking for within this neighborhood is making sure that they're looking for properties that are plus or minus 300 on the living space of the square footage, because there are properties that have basements. So that's why I mentioned living space. Next is the lot size. Lot size only depends and varies if you're looking and comparing acres, property with acres to another property with acres. So lot size is acre to acre. It does not apply to a property that it's less than 5,000 square feet to a property that has 8,000 square feet. No, it's literally down to like the acres as well too. Next is going to be the radius of the property, and make sure you're within a half to a 1 mile radius. But now there's the major restriction on this radius is making sure that you're staying away from high traffic roads or double yellow line roads, which double yellow line roads are high traffic roads where there's commuters, buses, delivery trucks, semi trucks, construction trucks. So there's a constant flow of traffic in this there's a constant flow of traffic on this road that again an appraiser is not gonna, no matter how similar there's a property on one side of the road to the other side of the road, an appraiser does not pull that comp from the other side of the road just because of that high traffic road. It's considered a danger area or just a getaway or kind of like a blockage zone for that neighborhood whatsoever. We definitely come across various examples when we're looking for some properties live. Just in a few minutes, I'm gonna show you guys of what to look for, but you're gonna come across some of them as well too. And when we're coming, if you happen to be coming across a property that it's either the front of it, the side, the back, or the other side has a major road to it. Um, Automatically whatever the price is or whatever the seller or the agent is asking, it's an automatically 10% discount on that property. And the reason why is because again, that high traffic road, you never know, maybe down the street there's a college, maybe down the street there's a prison, or maybe it's an off ramp, or again maybe it's just a path for a lot of trucks. So it's going to be a road where there's a lot of dangers coming into the property, where again that's putting a lot of pressure in in the insurance. So anything can definitely happen. So usually when you coming across properties that are, again, the high traffic road or double line road is in the front, the back, or left or the right of the home, take a 10% discount automatically from that property, because that, again, it is a possibility of something bad happening to that home. Not that I'm not trying to jinx it. It's just, again, it's for insurance purposes, and the insurance could be a lot higher usually for those properties because of those roads. Next is looking at properties that are within the same years, plus or minus 10 years. Don't compare a 1960s home to a 2024 built. That is not a comp that you should be pulling in, because, again, the materials, everything is pretty much very differently from both of those homes. So you want to compare apples to apples, not apples to oranges. When we're looking for apples to apples, you want to find at least three comps. For these three comps, I always recommend going into like the past on what has sold, into the present, what's currently under contract, and into the future, what's currently active in the market that it's still available or just got available to being sold, because that's going to let you know how buyers, how many buyers have been in the area, what buyers are buying right now, or what properties they're what kind of properties that some buyers or hedge funds or investors are just overall diving themselves into. And of course, if you see a property that is currently active but it's fully updated, if you literally can search specific filters into whatever platform you're looking, and if you type in fully updated or updated, you're going to come across all these properties that are updated in that area. But again, make sure that you stick in within the area or the neighborhood of your property. If it's 2 miles out, of course, that's not really good to count as a comp. But when looking for comps, look for past, present, and future. So sold, currently under contract or pending, and also what's for sale right now. So all of it we're going to be using, we're going to put it all together. Like I said in the beginning, a part of it that I use, I have my own calculators that I've designed to help me expedite my process of analyzing these deals. And of course, I'm going to be using a lot of free platforms, Zillow, Realtors, Redfin, and PropWire to help me analyze a lot of these deals. I'm not an agent, so I don't have access to the MLS. And then I expect the same thing from a lot of people that do join these live Zooms. They don't have access. They're not really real estate agents. Some of you might be, and it's perfectly fine. You have access to that resource, but the ones that we're not, we have to use as many resources as possible to make sure that we're doing our due diligence properly, to make sure that the deal, when it comes to wholesaling, it really makes sense for an end buyer, and we're getting at a great deal from there. So with that being said, let's just dive into analyzing some properties. And let me share my main screen over here. Let's go. And again, if you guys have any questions, by all means, drop it in the chat. Or if you have a property you want me to get analyzed, by all means as well too, drop the address in the chat, and any details that you might have, so that we can see what's going to be what's happening with that deal as well too, if you happen to have any information. If you don't, it is perfectly fine. Like I said, I have this spin the wheel, so we get to select a random markets and see what's happening in this area. I just did Lexington, Kentucky. Was it on literally last Friday, so a week ago. So I do have that video here. I'm trying to do a different area. Philadelphia, Pennsylvania, same thing. I did a video last week, last Wednesday. Philadelphia has a lot of properties out there right now are just sitting. It's a horrible market right now. And all the properties are overpriced as well too. And comps, don't even get me started with comps as well too. New Haven, Connecticut. Yeah. Actually, let me do this one. Let me do Macon, Georgia, or Macon. I haven't done that one whatsoever. Macon, Georgia. So what I'm looking for here is properties that are on the market. A lot of people always question that there's properties available on the market that you can get a discount. Yes, there are. And if there's nothing in your area, then it's all about networking. Networking with agents. Some agents have buyers, some agents have properties, agents are cold calling, agents are doing the marketing. So it really agents are basically doing everything that you're doing in terms of like your wholesaling. If you're wholesaling, if you're reaching out to sellers, you're either cold calling, you're marketing with either social media, advertisements, bandit signs, driving for dollars. So whatever it is that you're doing in terms of marketing, an agent is already all doing that. So I love to work with agents because again, it's less marketing for me, less overhead, and it really helps it out in terms of it. And again, I work relationships. So my relationships is again with everybody from title companies to buyers to agents, to I occasionally wholesalers as well too. If I come across wholesalers, some agents are wholesalers as well too. So you come across everybody. So that's part of the game of real estate. But honestly, significantly, it really helps out when it comes to it. I like to set specific filters when I'm looking for properties. So right now we're going to use the ARV calculator. So the ARV calculator pretty much does this. You would put all the basic information, automatically it spits out what a possible purchase price should be. But of course, you want to find out, look at the pictures, if there's enough pictures to like analyze on what the repairs will be on the property. And of course, how much would the property need to resell for my investor to make their money? Of course, as I find out how much it needs to resell, I got to see, are there properties selling for that price? Or based on the asking price, or the properties more close to my first offer that I should be bringing, or my personal purchase price. From there, I have to look for comps. So I find at least 3 comps, past, present, and future. Once I have my price per square foot on those comps, I basically have my ARV, and it lets me know how much my investors are going to be purchasing the property. But it also lets me know as I'm doing the research, I'm also able to notice how much a lot of properties are going for out there. So even if my investor gets like a small discount, because again, I like to be aggressive on my offers. But if I'm aggressive in my offers, then we are able to close really quick on these deals. And that's why I love to work with agents, because it helps them move their inventory. So that way we can move on to what they're currently working behind the scenes, but it's still not available just yet, or what they're about to list. And maybe I can get a first hands dibs on that information before it goes public. So it really helps out significantly working with agents. And then from there, on my investor side, I'm able to let them know how much I know how much they're able to buy the property for, and of course what their investment, how much they're going to get on their investment in terms of like margins. So that's going to be the entire calculator. So let's put it into play, and let's set specific filters. The first filter I like to look for is for houses. I hate coming soon, and of course I like active and under contract as well too. I want to see where there's a good amount of activity happening. I like to look for properties that have been sitting for more than 45 days. And for these single families, I like 1,000 square feet and higher. All right. So and let me exclude 55 plus communities. It's just nothing against 55 plus communities. It's just, again, something I do not like. And also the other filter I like to put into play is no HOA. No HOA whatsoever. So HOA, I don't like HOA because there's always a lot of restrictions on these HOAs. So you have to know kind of like HOA laws as well too, when we're looking into them. But first, let me take this under contract actually. So it looks like in this market, there's about 66 properties that are under contract and pending. So that's not too bad, but also not too good. I would expect more like at least 100. But it's a small city, so I mean, let's see what we're able to find out. And I see a lot of these prices are definitely low, so that's perfectly fine. Let me set this from prices low to high. And like I was mentioning earlier, gut job properties, anything less than 50,000, here you go. These are all going to be gut job properties, 16, 19, 19. And usually for these, the agent or seller is going to be asking for cash, no finance whatsoever on these. So it's either going to be a hard money loan, or it's just going to be straight up cash to close, because again, it's a low price for a reason. But of course, you always have to do your due diligence and see how much does it actually need in terms of it. But I am looking for properties at least like $60,000. Because around $60,000, see, there's this $52,000 home. Not too bad of a condition. Again, I did mention $50,000 or less is a gut job, but again, for this market, it's not so bad. But I am noticing something big. I do have to consider uh, acres into it. So again, when I was mentioning talk about lot size, acres to acres, I have to compare acres because it looks like I do have a major um, acreage in this property. And again, it's not so bad whatsoever. I really like it in terms of like condition and the price of it. This is really good. But the only thing it's what's actually happening to it or what's happening here is the only thing that I have to find out. Um, New HVAC, newly painted, great investment, family 175, hardwood floors, so that's color. Okay, cool. So not besides the new HVAC and new paint, that's pretty much what it was done. And honestly, it does need like a lot more from it. So this is a great property off the bat. 2-1, but let me find out where this one is. Looks like it's right over here. 52,000. So now let's start filtering it down to those comps. So when I talk about main roads, you guys can see Miller Field right over here. This is going to be a main road. Same thing with Jacksonville. That's going to be a main road. And of course, you have like this freeway over here. And there's a park and a lake over here. So this is going to be um, Zillow, Redfin. They have like the little draw in all platforms as well to have like a little drop button. So this is kind of like my neighborhood. Again, sticking to the same neighborhood. That's gonna be kind of like my neighborhood. It's not a perfect, but again, that's my neighborhood, what I'm looking for. So off the bat, I gotta look for some comps. Let me see if there's anything under contract or pending at the moment. Um, and there's no properties that are under contract or pending. Usually they pop up when you automatically click it. So there, but there's nothing here. And actually, let me take this. Actually, there are some properties that are under contract and pending. Looks like we have some of them up this neighborhood over here. So I don't know if this is going to be like a completely whole different neighborhood, but that's the thing that I have to find out. Let's go through here. This one, 1500. So I do have to look for like specific filters for it, but let me go through here. Let me go back. Let me take a step back. I got a little bit advanced over here. Let me take a step back to put all the information so far. So asking price, $52,000. Square footage is 1009. Awesome. It didn't mention anything about a basement, but it's always good to double check on the property details to look at the foundation as well too. Foundation or basement. Basement is a crawl space, and the foundation is probably going to be where's that? Usually right here. Okay, they didn't put it. They didn't put it into it. That's fine. Vinyl siding, like I said. What kind of siding we're looking into. So it's a crawl space, so there's no basement here. So off the bat, if I were to look into this property, an offer should be $36,000 with $400. That's if I'm trying to fix and flip. Again, I'm putting myself as the buyer. If I'm a wholesale, of course, the number is going to change a little bit. And it looks like we're looking at $33,000, maybe for a quick five to like $8,000 wholesale fee because this is going to be kind of like my highest offer or like the highest offer I should be bringing into the table. So 33,800 is my highest offer so far. But again, I haven't done my full due diligence based on the property's details and what it actually needs. Definitely looking to do the flooring looks really good, actually pretty solid. It's just gonna be paint, bathroom, and definitely like the kitchen. So flooring, kitchen, bathroom, and paint. Windows. Looks like some windows got updated. So when you see a white, kind of like a thick layer on the window, that's going to be a newer window. Look at the middle window over here. That one's a red coloring, so usually that one's a little bit old down. So maybe there has to be a change in some windows and Luckily, there's not a lot of heavy gardening to do like in the back. There's not a lot of overgrown trees. It looks like they maintain this, which is not bad whatsoever. So overall, like really good shape. And we also have a big lot of a property as well too. So I'm looking more on the average repairs. I'm gonna put this around $30 per square foot. Average repairs are between $25 to $40. If I always want to play it safe, I can always go $5 more per square foot. So around $35,000 if I want to truly play safe. But honestly, I think with the $30, so around $30,000 on repairs is definitely something I can get away with. Maybe my investor is looking for a 20% investment on this. And so the property needs to sell for more than $105,000 for my end buyer or my investor to make their money. If I'm wholesaling this one based on my asking price, or sorry, if I'm fixing and flipping this one, my offer is $36,000. So if I want to fix and flip it, I need to resell my property for around 84,000, maybe $85,000 from there. But again, now I got to go through the comps, look at the past, present, and future. Right now, I was mainly looking at the past from here. So I was trying to look for, sorry, at the current present to see what's currently under contract, and I'm seeing a lot of 105, 110. So the seller's right on the spot of it. So that's really good. The only thing is, are they in the same condition or are they going to be in better condition for these properties? And so far, it looks like they're pretty much in the same condition. The only thing is I gotta make sure I stick to that same acreage of my property. My property's acreage is 0.32, or what is that? Roughly, I think it's gonna be 15,000 square feet. Acres to square feet. Let's do 0.32, 14,000 square in the square feet. So that's something I definitely got to keep on. I see this 105 for a half an acre. That doesn't really work out for me. Quarter of an acre on the other side, and that one's across the road over here. This $85,000 one is one bed, two baths. Why is there more baths than beds? Okay. But this one's selling and this one's under contract for 85,000. Okay. But let's go for what has been selling in this area, if there's anything selling whatsoever. So off the bat, there's this $355,000 home, 55 acres. So again, that won't really count into it. So let me set my specific filters. My property is all the way up to 1,300, and then the smallest is 750. And of course, I'm gonna be looking for looks like half an acre, down to 95, actually 25.25. So far, there's only one property sold, 0.35 acres, and this sold in September of last year for 136. The condition for this property, there's no pictures. Let me look at the history if there's any pictures of it. Okay, cool. Um, let's see. So great work, fully updated walls, kitchen, flooring, paint, windows as well too. So this is basically what our property needs to get it fully updated. And again, it's the same acreage to our property. So this is basically what we have to do to our subject property. These are the kind of updates that we have to look into play. And if we look into this property, what if it sold for $135,000, what did it get under contract for? And it doesn't really show, but it looks like this property got under contract, it got relisted, it got under contract, it got relisted quite a few times. So it did take some time for that to get done, but it looks like a lot of properties do take a while to get fully sold over here. So that's one good comp. And I say good comp, but the only thing about it, um, it is on the other side of my neighborhood as well too. So that was, and it's a little bit outdated, um, as well too. So that's the only thing. And what's currently active overall. There's no filters to this one that is currently active. Actually, I do have to say some active one. There's this one for $100,000, but this is in bad shape, but it is a 1200. The only thing it does need, it is a 3 bedroom, 2 bath. So if you have a 2 bedroom, 1 bath, as an investor, you have to add that extra bathroom and that extra bedroom. An extra bathroom is going to be an extra $10,000, and an extra 10 to like $15,000, and an extra bedroom, same thing. It's going to be an extra $10,000 to add an extra bedroom. The property has like the size for it to get those two done, but again, it's going to cost that extra to match it up to the apples to apples. So, and then this one, um, it's right, it really close to like in terms of acres. The only thing it's that automatically takes a huge amount of my repairs. I'm estimating my repairs to be $30,000, but automatically 20,000 are just going in the extra bedroom and extra bathroom. And so that's where you usually get a lot of investors telling you, oh, this property needs more because I need to add an extra bedroom or an extra bathroom to match it up to like the neighborhood. That's a great example of a scenario that you're gonna come across if you're wholesaling a deal like this. So far, I'm not really seeing a good potential out of this one. The only great potential is getting the property at a great discount. It has been sitting for 108 days. And has it been under contract in the past? It has not been under contract whatsoever. So there's probably zero activity on this property. So me as a wholesaler, that's what I would bring in. Look, um, I see the property has been sitting for 108 days. I can close quickly. I have myself, my partners and I were cash buyers. We can take this off your hands in the next 30 days. But definitely, of course, let us do like our inspection, and we want to make sure everything definitely fits us in terms of like a likability of the property. But we definitely have to get like a huge discount on the property. So everything that I'm noticing is between like 105 to like $130,000 in terms of like the ARV for it, which I'm gonna go based on this one. The ARV is 107 per square foot. So I'm gonna put 107 per square foot because that should be giving me close to like 110. There you go, 108. So I'm gonna go with 110. For sure, I can definitely get away with 110 for this property. My investor again is gonna be a fix and flipper, so they want to purchase their property themselves between $46,000, an aggressive investor, to be all the way to $55,000. A more conservative investor. And me, if I'm able to get it under contract for $33,000 or 30, even $36,000, that's already a $10,000 to $20,000 wholesale fee that I'm able to bring into the table. And of course, my investors, they are going to be making a 20% profit. So usually when I come, there's a difference between my wholesale fee being greater than the investment. I want to play it safe, and I play the relationship route with my buyers. So I'm willing to negotiate with them and let them know what's the best price that they're willing to get or want to get for this property, and just work with them so that way they have more profit. Because again, I want to bring in properties that make the money. If they're making money, which I know for sure they can sell it for 120, maybe even $130,000, that's going to bring them an extra $10,000, $20,000. But again, you have to work on the side of relationships especially when you're working with buyers. You need to have like a list of like eight buyers that you have a strong relationship with. They like how you do your numbers, your due diligence, your analysis, your contracts are always like in great prices. And also too, it's just that's the kind of buyers you want to be buyers. These are the ones that you have to be aware of. They're not too aggressive. They're not too they play more conservative, but they take a while. Their money is like tied up somewhere else. Sometimes it's really they're not looking to invest that month or on anything at the moment. So those are going to be more like your B buyers. And C buyers. They hardly respond, or they're just not really as active as much. So you have to create like your list of relationships with all these buyers, and you have to understand where they're coming from, but also you have to also consider like yourself, but also mainly work on their relationship side. So that's how much I will want to get this property in the contract. And me for sure, I know I can get this property in the contract for $36,000 or even less, based on two facts. One, how long the property has been sitting, and then two, there's not a lot of comps. So if I were to ask the agent for comps, I bet you that the agent, which this is what a lot of agents do, agent's gonna be giving me comps outside of this area, what's my neighborhood or my area zone that I'm looking into. Why? Because they're used to just finding comps that it's as close as possible, but of course at a high price, so that way they're able to market it up. But again, I don't know this agent, so that's the thing. I have to understand where they're coming from, but I also always like to call them out to see what kind of information they have and if that's the actual fact, or if they don't have anything, and then that's where I'm able to negotiate as well too. So it's a hate and love relationship they need to have, but it's always good to just put everything in front and just be as transparent as much as possible, in terms of like how you want to do like your deals, so that way you're putting the foot forward, and build that relationship and then have people work the way you like to do your business. So just a little advice in terms of that. But this is a great deal, honestly. It's just a great deal in terms of like how low you can get it like under contract, and then I know my investors can definitely get it, can sell it for $110,000 or more. Even if there's like one comp, uh, I can definitely get away with that whatsoever. Again, that's just me, but it takes some experience, and it takes a lot of knowledge, and also how to talk to people in terms of it. So it's just how I will do it, but I will actually save this into it. I just don't know Georgia market, so I have to like kind of take a step back. So if you guys want to take this one, take a dive into this one, do a trial and error, or get your steps into like wholesaling, this is your opportunity on using this property right over here. You know how much you should be getting under contract for $36,000. Estimated repairs, $30,000. If you want to play it safe, $35,000. And then again, that's where the property can definitely sell for $110,000. And the average per square foot on the comps is going to be 107, which is the $110,000 price point. And then your investors, they'll want to buy between 40 to like close to like the asking price on the property. And there hasn't been any offers too, or the property hasn't been under contract, so snatch it before the contract gets canceled. Which it's not bad if it gets canceled. So that means you can now do a deal with the seller directly instead of an agent being involved. But again, I love to work with agents because I don't know if this agent has any other properties that are similar to this one in the area, or in any other counties surrounding this county. So that's the analysis in terms of the fix and flip route. Again, if you guys have any questions, I know it's a huge amount of details that I'm giving out. The recordings do get recorded, so if you always want to go back to like rewatch this on how I'm doing the process, by all means, go to eltonvargas.com/education, and you're gonna be able to see some of the previous live streams, or even this one as well too in there. But now we're going to do an example of the complete rental one. If you're trying to look for a rental analysis, or if you come across a home, a single family home or a multifamily home, then it's all about numbers in terms of like income and expenses. Then that's what we're going to dive into at the moment. So let's check out, let me reset the filters. Let's see here. And I'm going to be looking for multifamily, just because multifamily have some agents provide some information in terms of like the multifamily. Oh, $35,000 multifamily. Bet you that doesn't have any income. But let's check out in the city, because I'm noticing that anything outside is more like abandoned, so there's not a lot of potential happening there. Let's check it out through here. Let's see. Hey. Let's see here. Let's check out this one, 2 bedroom. And this is what I'm looking for. I'm looking for properties that are fully updated. So here's an example of an updated, kind of like that uh, like egg white. I would call that color, honestly, egg white and white. Um, Great bathroom, flooring, paint, doors, windows. And this is a 1 bedroom, 1 bath. All right, cool. Let's see. It's been sitting for 60 days. Has it been under contract? It has not, and they haven't done a huge price change at all whatsoever. They've been stuck at that $102,000 since the beginning of the month. So it looks like every 2 months they're doing a price change, but only $8,000, less than that. Hmm. But let's check it out. Let's see what kind of details we get. New flooring, painting. Okay, okay. Also comes with appliances. Okay. The thing with multifamily is, does it come with tenants or does it not come with tenants? If it comes with tenants, does it have are the tenants in a lease agreement? And how long is the lease? How long has the income, how much income has it produced in the last 2 years? Not just 1 year. A lot of agents brought you the last 3, 6 months. No, I'm looking for the last 2 years. I want to make sure that this property has been making some money from the day it was bought out. So it so far doesn't provide me any of that information. So I'm gonna use some free resources. First one is going to be Zillow rent estimate. Zillow rent estimate is going to tell me how much the property overall is going to be coming in. So it's a duplex, so that means it's 2 units. Um, and it looks like the property overall it can rent out for 950. So 950 divided by 2 is going to be more like 425. Sorry, 475 um, per side. So not really good in terms of like the rental. I always like to double confirm, so I like to use Zumper. Zumper is another great one. And what I like to do with Sumper is I like to pull the city, the state, and the zip code. So Sumper space city, state, zip code. And it was going to show me over here um, apartments. I'm looking for average. Oh, I forgot to type in average. Average, average rent in Macon, Georgia. So I'm looking at a house that is 2 bedrooms, 2 baths. And over here is telling me 985. So both of them are spot on. So if it's 985 for the entire home, there's two sides of it. So it's a duplex, 2 units. So again, it's going to be 475 that I can get for it. So asking price is $102,000, 102,500. The number one thing, first that I'm think it's again it's me I'm doing a lot of analysis is thinking about the price and the rental of the property and expenses. Those are the main three that I'm looking on top of my head off the bat. If the property is at $102,000, $102,500, the property has to be renting higher than 1%. So it's called the 1% rule. And basically you multiply the asking price times 1%, and the property has to be renting for $1,025. So far, we looked that the property it can only rent out for the most on based on Zillow 950 or 985 based on Semper. So I'm gonna play it safe and go 950 because Zillow's telling me that I can rent it out for 1197, but that's not the case. Again, always play it safe the best that you can. So if I need a $1,025 in income for this property, so far it's not meeting that. So now what I have to do, there's two things that I can do. Either I can push the rent, but if I push the rent, maybe I have to do like more updates or make it more attractive so that way the property can be or make it more safer. You just something, add some incentives into it or spend money to bring the property so that way I can rent it up. But that's bringing an expense already before the money comes in the rental side. Or two is going to be bringing down the price. So if I bring down the price and the rent is 950, then that's where I'm able to make some money on this rental. So just think about that. So far, $102,000. If I were to put 20% down, I need $20,000. It's going to bring my monthly payment or my mortgage payment to $602,000. That's principal and interest based on my interest rate at 8%. So it's perfectly fine for it to be at that. Um, next, right now for rentals, it's going to be like 7.5 to like 8, and maybe they're even increasing as well too. Closing costs are going to be between 2 to 5%. I'm looking at Georgia. Georgia's not too expensive, so honestly, it should be close to like 2%. So I'm gonna go with 3%. Closing cost is gonna be $3,000. So the 20,000, the down payment plus the closing cost is gonna be $23,575 that I need upfront money to buy this property at at its current asking price. Okay. Now let me go with the rentals. So far it's a 1 bedroom, 1 bath, but there's two of them, and then both of them can rent for 475 or AKA 950 for the entire of it. There's zero in the bedroom, so let me take that off. The time frame I'm looking in terms of analysis for 12 months. There's no garages that I've noticed. Let me look through Street Viewer. So you guys can see a lot of these homes are just kind of like um, very, very spacious. No, very land spacious, very tiny spacious. There's no parking. Like, where do people even park out here? Just like on the road, like over here on the side. Um, what else? What else? Is this a school or what is this? Parking for what? For a church? For a park? For a church? All right, cool. I didn't even see that. Um, And it looks like this parking is probably the parking for the church as well too. I don't know what that sign says. Um, but most likely it's definitely for the church. So that's going on over here. So every Sunday, this whole land basically is getting very privacy. So it looks like unless the tenants are the ones going to church, then there's no lack of privacy. But it looks like every Sunday there's going to be some type of privacy issue. Again, varies. Um, but it's okay. There's no garage, so I can't bring any extra income. Laundry is going to be inside, and I can't bring any extra income from there. So looks like I'm stuck at that 950 income. 950 times 12 months. That's going to bring me a total of $11,000 of income. Again, I haven't deducted expenses, so now let me go down through the expenses. Expenses are going to look like this. There's three ways you can do it. First way is you stick to the standard 40%. 40% if you're a investor in whatever state and you're trying to invest out of state. So you're gonna have a property management manager for you. So that's gonna be 40%, 30% of expenses and 10% on the property management. 30% now, option number two is you can rent it out and basically be like the landlord yourself. So now you can bring extra income. So now you can drop it down to 30% if you're going to be managing the property yourself. Or three, what you can do in expenses is you can break down everything. All the expenses are pretty much the following: taxes, insurance, HOA, maintenance, vacancy, and property management. Those are going to be your 6 expenses when you're looking at a rental property. Like I said, you can break down everything down to the dollar, so that way you know. But I'm gonna play it based on my 40% rule. So my expenses are going to be $4,560. Again, taxes, insurance, maintenance, vacancy, and property management. There's no HOA in this neighborhood, so I don't have to worry about that. So my net income minus my expenses, that's going to bring me a net operating income of $6,000, or AKA $570 per month. Now, I do have one more expense to deduct, which is called debt service or mortgage. If you guys go back to my mortgage payment is $600. But my income after all my expenses is 570. So far, it looks like I'm not making any money. It looks like I'm losing money on this property. I'm losing around $380 every single year, which is $30 a month. So I'm short $30. But now part of the analysis, it's telling me quite a few things. One, it's telling me that my risk, or AKA my cap rate is based on risk in terms of income, net income, which is my net operating income, and on price. So the risk for this property, it's really high. The lower the number it is, the higher the risk it is. The higher the number it is, the lower the risk it is. But both of them have their pros and cons. So that's where you have to find like a sweet spot. My sweet spot on rental properties at all times, it's 10%. 10%. That's where a lot of hedge funds, investors, that's what they always try to aim for, 10% and higher. Just because the way it works is buying the properties at a 10% cap rate. The whole strategy when it comes to rental properties is buying at a high cap rate, which is playing it very safe, and then eventually pick up a lot of cash flow and then pick up a lot of equity in the property, and then eventually sell that property at a low cap rate, because again, you're trying to make your investment back as well too. Quick question on earlier example. Yeah, what's your question? Listing price was 52 and we decided it has to be bought for 36 to make it a good deal. Less fix and flip, a fix and flip was $36,000. As a wholesaler has to be less than $33,000. So 33 is the highest offer for that other property that we're looking at too. Yes. So anything less than $33,000 in terms of like if you're trying to wholesale. How do you make them sell for 33? Just let them know how quickly you're able to close. So if you have buyers on the property or in the area, it's literally about let them know like this property has been sitting for this long off the bat. If you're having like an agent, I'll get back to that. Let me finish with this. I'll get back to your question. Trust me, there's a time for like some Q&A, so I'll definitely answer your question from that on that strategy. So we're looking at in terms of like, going back to like the rental, in terms of like cap rate. Cap rate again, it's always good to get out a high cap rate so your investment is safe. So here's an example. If I were to buy this property at a 10% cap rate, I needed to buy it around $68,400. The property hasn't been sitting for too long, 60 days. It is kind of a long time for a multifamily. So I can definitely again push my offer to be very low, and it's perfectly fine. Because again, my cap rate on this property, it's around 6.7. So you guys can see at a 6.5, that's close to what the seller is asking. But again, I want to start at a high cap rate because again, I have to work through negotiations, and maybe you ended up closing around 8.5 cap rate, which is $80,000, or a 20% difference on the asking price. So the asking price on this property is $102,000. My highest offer will be $80,000 for it. Because that way that's going to be around 8.5 cap rate for my investor. So again, I will start even 70,000, go up 75, maybe 73, 75, 79. And then the most I'll definitely want to push it for is that $80,400, which is again, it's a 20% difference from the asking price currently. And like I said, because of how long the property has been sitting, and I want to make sure my investment is safe, I have to get it close to that. So let's put in, let's say I'm able to get it for under contract for $80,400. How much will the property cash flow at $80,400? Off the bat, my monthly payment on my mortgage went down. My initial investment went down a little bit as well too. My rental stayed the same. My expenses stayed the same. The only thing, like I said, the biggest thing is going to be the cap rate, because now the property is cash flowing, is bringing income. So now the property is positively bringing you some extra money on the side, and especially with today's rates. They're really high, but a strategy that you can do is you can do a 1031 exchange, or you can do a cash out refinance. But with the thing with cash out refinance, they are going to get expensive in the future once rates start dropping, because that's what everybody is going to want to do. They're going to want to refinance their homes. So be ready for expenses to be high on the cash out refinance. I see that for sure happening in the next 3 to 5 years. So again, like I said, the property is definitely going to be cash flowing. My mortgage went down a little bit, and there's there's some lenders or debt service coverage ratio loan, which basically if you ever want to get like a loan based on how the property cash flows, then there's this debt service coverage ratio. If it's less than 1, then the property is not a good deal. If it's more than 1 or more than 1.2, it's going to be a good deal, and they're going to be definitely lending you, just because they mainly focus on, you don't have to put any documents. It's mainly on how much the property can cash flow. So if we go back to the asking price, you're going to see the debt coverage ratio is definitely going to be less than 1. So there, if you happen to apply for a DSCR loan or a debt service coverage ratio loan, then the property is going to get, your loan is going to get automatically rejected from there. So just giving you some info and some insight in terms of that. All right, but that's going to be pretty much our analysis in the complete rental side. So I'm gonna do some Q&A if you guys have some questions. If you want to go back to retouch on something, I know there's a question to get asked at the moment. Let's go back to it really quick. Where was it? Uh, Fanitra. Okay, so yeah, so you're mentioning how do we get them to sell? Again, it's simply asking, whenever you're coming a lot across deals, is let them know like what you're doing some due diligence, and you're noticing that this property, you need to acquire it based on the repairs that it needs, based like on some small research that you've done so far. It looks like your offer has to be less than what they're asking. And then from there, like your offer, always give them a ballpark. Don't give them a straight number. Let them know, like, look, my offer so far is like standing close to like the mid-20s. So that'll be like your starting point. And then from there, the highest I'm willing to go will be like 28. All right, maybe $30,000, and you can top it off to like $33,000. That's honestly like the most. The thing is, you have to bring some contingencies. Being a low price property, it will definitely have to be a cash buyer that you have to get into it. So your offer has to be cash. You have to probably close quickly, maybe less than 30 days, 25, 21 days. 21 days is like really like the minimum, because you also want to have an inspection period. And that inspection period is going to be for your buyers to come check it out. For you and make sure it definitely fits them as well too. And also, by the way, you're able to unmute yourself if you want to unmute yourself and ask any questions as well too. But hopefully that's able to help you answer your question. If you have any other questions.
Yeah. Thanks for letting me unmute. But basically, this is the wholesaling deal that you're talking about, right? Like if we talk about wholesaling, so you have to be ready with the buyer ahead of time, right? In the sense, you should have the buyers ready.
I always strongly recommend it, just because it makes everything really smooth. The way you're able to find buyers is look at properties that are recently updated. So again, Redfin, Zillow, whatever platform you're using to look for properties that are publicly available. Type in on the key search, type in updated or fully updated or recently updated. Just type in those keywords, and it's going to pop up all those. Those are going to be properties that are listed with an agent. Let the agent know, like, hey, I have a property in the area or in this zip code. I'm not sure if your investor for this property that you're selling that got fully updated, are they looking for other fix and flip deals, or are they looking for any buy and hold deals? Because again, my name is Elton. I'm wholesaling this other property. So if they're interested, it can definitely bring them. The agent can bring the buyer or the investor another deal for them to fix and flip or whatever the strategy is. That's one way. Another way you can find buyers is look at rental properties. Rental properties are owned by property managements, and it could be a rental property for that property management. So just let them know, hey, property management, my name is Elton. I'm looking. I have a deal over here that I'm working with. I'm trying to wholesale this, but I'm trying to see if any of your investors are interested on purchasing other properties to buy and hold, or maybe if they're trying to fix and flip, let me know. So I can present this over to them. So those are 2 ways to find buyers completely for free.
Oh, okay, thanks. Basically, it looks like the proper relationship across multiple people, multiple agents, That's what makes the difference, right? And then once you establish the good relationship, they themselves might come back to you saying, "Hey, I have somebody," something like that, right? Yeah.
Exactly. Yeah. Because again, it's either you are doing the work of reaching out to buyers, sellers, agents, basically everybody, or have somebody else. If you have like the money for it, have like a virtual assistant or an assistant do like everything for you, and all you're focusing on is on just talking with buyers. But again, that's if you have the money, or again, what agents already basically doing a lot of that work. So that's why I like to. The biggest incentive with an agent is let them know, hey, agent, I'm not an agent myself. I'm actually my partner side. We buy properties in this area, and we came across your property, and we're kind of interested on it. We're still looking for some other deals as well too, but again, we don't have anybody representing us. Can you represent us on the buyer side? And what that incentive does, it basically gives them double of the commission. When an agent gets double the commission, they're happy. And if you do that for multiple properties, they're always good. Again, you're scratching their back, they're gonna scratch your back as well too. So they're gonna give you some insights on, hey, Elton, I have this property. Sometimes they're able to give you like the address, sometimes they're not able to give you the address, but they're giving you like a heads up, hey, I have this property, it's off market, which a lot of buyers and investors love off market properties, and it's off market. If you're interested, once I'm able to give you the address, I'll let you know, but it's on this area, it's really good. The ARVs are close to this over here, and I'm still working on the deal, but as soon as I have like the property fully finished, I'll send you like all the details. And bam, you don't have to do any work whatsoever. The agents, again, you work so much on the relationship that the agents are calling you or texting you or emailing you or what is it that they have coming up themselves to bring over to your side. Because again, they're gonna like how you help them with the commissions. You're able to move quickly, and again, just have that relationship built from there.
Okay. Thanks.
Of course, my pleasure. Any other questions? How many people are? Oh, it looks like just you. Yeah, if there's no other questions,
So
again,
which area are you? Sorry, where are you exactly located actually?
I'm in Southern California.
Oh, but yeah, which city?
Why?
I'm in San Diego,
In
so
San
just
Diego?
trying to. Yeah.
Oh, I'm in Long Beach.
Oh, okay. Not too far. Okay.
Yeah.
But then you're not focusing on any particular close by area or anything to do all these things, is it? Like, or are you?
Mhm.
Is there any preference to do nearby areas so that you have more, information, more stuff, more hands on?
I mean, if you like hands-on, then it's always best to do locally. Me, like I said, my previous background has been sales, so over the
Mm.
phone, I've done so many sales over the phones and all over the nation. So when
Yeah.
I get into real estate wholesaling, it's pretty much
Mm.
the same thing, just talking to
Okay.
people. And again, you're basically selling yourself on um, how well you're communicating, how many questions you're asking, and then
Mm.
also again let him know how you do business, because real estate wholesaling, it is a business. So you have to set that foot, because again, sometimes some agents like to be very aggressive, or some sellers like to be aggressive, or just other people like to be very aggressive. But again, you have to be able to battle those people out. And again, if it doesn't really work out, then just move on to somebody else. But
Yeah.
yeah, if you like to do hands-on, it's always best to do more locally. Just get to understand like your area, look at what properties are available. But if you're good over the phones, then virtual wholesaling shouldn't be a problem for you whatsoever.
Yeah. But then, yeah, I think the beginning is the problem. Like once you get to at least one or two, then you get the flow and start doing a lot better.
Yeah, yeah.
But
As soon as you do like your first call, you're like, oh, that's it. All right, cool. Let me find somebody else.
But to find that, it's not that easy. Yeah, the thing is, like, so first you are finding first the seller, right, to begin with. Once you find the seller and you are about to go into contract, you have to get the, or you have to, you're saying like you have to have the buyer ready, in the sense you have to at least know that a list of people who are looking for properties similar to what you are trying to get from the buyer, right, seller, right,
Yeah.
and then
So
go from there.
yeah,
Okay.
just find buyers. Finding buyers, it's
Yeah.
really easy, really quick. Like I said,
Uh-huh.
it's all about just looking. We all have access to the same information. It's like who's putting in the work to find to find that information, and then from there just work reversely. You're able to understand
Yeah.
how the buyers are. All right, cool. Start noting down. Figure out which ones do you like the most based on what you heard from them, or what you heard from like the agents as well too. Um, and then from there, once you're able to get like a list of like how what some investors are looking into, and then start setting the filters. Look for specific filters for this buyer. Look for specific, and again, you can categorize. A lot of investors just they're gonna always tell you they either want margins, so they're open to everything, and they just want margins. They want to make 50, 80, $100,000 per deal. Some are going to tell you, send me anything, or some of them are going to be more, I like 3 2 bedrooms or 3 bedrooms, or I like 1,000 square feet. So it just really depends. And again, you're able to start grouping them all together, and it's just going to be easy for you to find a lot of those deals. And when something gets sent over to your way, then you already automatically know who that buyer best works for on that opportunity that you have that got sent over to you.
Yeah. Okay.
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 No,
So
just
yeah, I think all this, I think I have done quite a bit of study and whatever it is, but then I have not gone to that first stage yet. So I enrolled in Bigger Pockets boot camp. I've been reading and liking a lot of videos of these two folks, Jerry, Pace Morby. All these guys are very high funda guys though. But you know,
yeah.
whatever they are saying, every bit of what they are saying is valuable. But
Mhm.
you have to get to the real core of like doing one deal first. Then I think things become easier and.
Exactly. So just like I said,
So
find your
did you start
market.
with wholesaling first? Always? Like I think wholesaling people say is the first thing, easy to do, nothing to worry. You don't